Hey, alright, so welcome back to the channel. It's been a minute. I just been busy catching up on things, so I haven't really posted a video. I'll be posting shorts like back to back just for fun. But today we're just gonna go over like how to do market analysis and finding those liquidity pools. So we're gonna focus on stock options. So we have the QQQ trust. That's the fun. So using this strategy, we can use calls or puts for options, either selling the stock, selling options, or buying options going to the upside. So what I do is every week you wanna go to your chart, go to the daily, right? So now, first off, what you see here, right? We see a fair value gap, which is the imbalance. We have an imbalance here, right? This imbalance eventually will get filled. You know, all it takes is just a matter of time. The algorithm will come and fill that order. So we're going to change this to green because green has to get filled and price should come back down here, but we're going to get to that point. So first off, what we're going to do is, right, we're going to go to trading view and then we're going to go to our daily, right? We're going to look for the closest imbalance, right? Closest imbalance here. Highlighted it, we filled it up with a box. This is our midpoint of the fair value gap, and this is where a whole bunch of liquidity and hedge funds and big banks and institutions are sitting, and they put their orders in here. So, right, price broke above this higher high here, right? This week we created a new higher high, and it broke above. So what we should be looking for is a break and a retest. Right? We can either retest this level here, or we can break down, filling in this gap, pushing past this higher high that it just created. So now, to get technical with it, right, we're going to get our line here. So this is Friday, right? So we're going to go all the way to Monday. Monday. Put your line here. We're going to make this line blue. Right? And then from Monday, we're counting back 10 trading days. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right? 10. So this is Friday. That's Monday. Right? So now, and you always want to put your lines either on a Monday or a Friday. So it leaves space in between starting a new week off, right? So now what we're going to do in between this range is we're going to focus on our higher high and our higher low, which is here, right? Change this color up, which is the week of June 7th to the 24th, right? That's 2 weeks and trading days, 10 days, 5, because we don't count weekends. Now we're going to get our lower low. Right? Alright, so now we have our higher high, and we have our lower low. So now, going based off this price action here, and this range of 2 weeks, 2 week trading days, which is 10 candles on the daily time frame, we see here, price broke above this buy side liquidity, and as soon as price broke above this buy side liquidity, we came back down for a retest in structure. So now, what we want to do is, right, we want to grab our Fibonacci, always bottom to top, right? Fibonacci, bottom to top. And I guarantee you, if you use this strategy for fun, for features, trading indices, trading foreign exchange market, there's money to be made. I'm telling you 100%, money to be made. Okay, so now we did our Fibonacci bottom to top, and guess what we see already, right? This 0.5, this golden zone area here. See our golden zone? 0.5 and 0.79, right? But most of the time, price is going to come back and retrace to that 0.5 area, which happens so, right? We're going to go here, we're going to grab another highlighter tool, and we're going to highlight, right, that 0.5 area, And then we're going to make that blue because that's our midpoint of the 2 weeks, 2-week trading days. So now we have our midpoint, right? So now what we can do is we can hop down on a 4-hour, right? I'm going to reset that. Hop down on a 4-hour. So now, right, starting a new week off, right? This was Monday last week. Today's Saturday. Today's Sunday. Correction. Today's Sunday. So the beginning of the week, I already had this marked up, right? So I was already looking to take price up into this area where this imbalance was, right? Price had an imbalance here, and I knew price had to retrace back to this imbalance with a fair value gap. And there's a big order block here, a big selling order block. This bearish order block here, you see this? This is an indication that once price comes and fills this fair value gap and taps this buy side liquidity, we're going to see some type of retest, right? So now, Monday hits, right? We're taking price, we're putting calls in, and we're taking price going all the way up here, right? So now, you could do any kind of, you could do a credit spread call, you can do credit puts, however way you want to do it. There's money to be made, right? You can sell at this area, you can buy at this midpoint level, going up to the target here, right? So now, this trade here from Monday, bouncing off this level, Monday's close going into Tuesday, right? Tuesday morning, price opened up here, bow. Off this price action here, once price retraced up, and we got more indication, we're gonna hop down to the hourly, right? This is Monday at 3:30, market close, right? Market open 9:30. Once we see this price break above this fair value gap and close above, and price does not want to retrace back down, right? Then we can hop into a trade anywhere here in between this time. We can hop into a trade at 11 o'clock, 12 p.m., right? Bow, right? Then you can put your stop losses at the lower low, which is here, right? And we can target either the higher high, or we can target the midpoint of that fair value gap, right? Which would be a 1 to 1. Or sometimes I'll target that buy side liquidity, which is, this is a 1 and 2, but you can target that buy side liquidity. We're just using the tools on TradingView. But you can target 1 to 2, you can target 1 to 5. So 1 to 5 is like more so what you want to aim for. 1 to 5 target risk reward level. Like, make sure your risk is not absurd. Make sure your risk is covered. You know what I'm saying? Make sure it's below that fair value gap and that structure point where that lower low was made for that time frame. And with that bounce off, most of the time when you put your stop loss below this midpoint level, the 5-0, and you see price not wanting to retrace back down, then you'll know that that's a great support level, and price is going to push up to this imbalance here. So now price pushes up to this imbalance. Now for the week, you're done. Bow. That's your trade. Now you can make it easy $100. It depends what you put in. You can make it easy $500. It depends what you put in. You can make 1,000, 5,000, 10,000, however much money and capital you have in your account, you can use this strategy for anything you want to trade. Anything you want to trade, right? Just make sure you do your market analysis. Make sure you're paying attention to news. Make sure you're paying attention to earnings, because earnings can wipe this whole thing's clean slate off. But if you use this strategy with earnings and you see a midpoint here, right? And earnings, the company, price is supposed to go up, but you're very unsure. If earnings is about to come out and you see price not breaking below this level and there's no imbalances to be filled, but there's an imbalance up top where you think price is going to go, but you're very unsure, most of the time price is going to push up to this level because those institutions and the government supposedly everything is not fake and algorithmic. They want price to go back up there to their price so they can get a better entry. and they can ride price and get more money. So most of the time, if you're marking out your analysis correctly, and you know how the weekly and the imbalances work, you have your sell side liquidity, your buy side liquidity, fair value gaps, price action, your order flow. If you know how all that works, and you know where the institutions are trading and putting their orders in, just trust your instincts. Because 9 times out of 10, it's going to work. If it doesn't work, guess what? You just get stopped out for a small loss. That's it. Okay? All right. So now, what we're going to do is now here, right? Now, we're going to start over. We have our new week. So now, guess what? We're going to go back to our daily, right? Now, since we have a new week, we're going to go to Monday here. Monday hasn't touched down yet. It's Sunday. So now we're going to count back 10 trading days, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? That's 10 trading days, right? So 10. Now we put it on that Friday. Because Friday, usually I'll put it sometimes it depends. I'll put it next to this so then I can have like a clear view, but there's no lower low. So we're going to keep it on Friday. So now we're going to do market analysis for this next upcoming week. Okay? So the week of the July 1st, the new month. All right? So now we have our higher high, right? Of the week. And we have our lower low here. Correct? Okay. So what do we see now? We see our imbalance is still here. Imbalance is still here. Now, price does not have to come back down to this level, right? But we're just going to see once we finish our market analysis. Remember, Fibonacci, bottom to top. Then we're going to grab our rectangle. Get that midpoint down. 0.5 midpoint. Mark this blue. Delete the Fibonacci. Now we have our midpoint. And guess what we can do now? We can drop down to a lower time frame because there's no higher highs over here. And these are just, look, this is just a whole bunch. This is a huge imbalance here. Price needs to be filled. There's fair value gap here, but we gotta take it slow, okay? We're gonna simplify it a little bit. So you see price reacting to this higher high, price made a higher high, right? After it broke this higher high, retrace back down once it hit that buy side liquidity. We're going to drop down to that hourly, right? So now on hourly, price is now below the midpoint, right? So for Monday, we should see a retracement down, right? I think I missed something on the 4 hour. Yep, I missed something on the 4 hour. So now, right, we should see a retracement back down to this level here. You see this imbalance? That's an imbalance for value gap. Now, if price fails to break below this level here, price is going to come here to this midpoint, fill up this fair value gap, retrace back up into this midpoint, and if price does not break this midpoint here, and it retraces back down, guess where we're going to go? Price is going to come fill this institutional order flow, which leaves a big gap because the big institutions bought in here, they left pending orders in, and they drove price up, made a higher high, right? Now they're getting out. Guess what happened? They got out, and they created another order flow, which is created this fair value gap that was taken out. So we're going to make that red, right? Taken out, drove price down, right? Some people got out, drove price up, thinking price is going to go back up because this is sell side liquidity. So it drove price up, going back to this fair value gap where they sold initially and then they put pending orders in for more sell. So then when price goes back up here, we're going to sell back down to either this fair value gap level here, or we're going to push all the way down going into this level here. So either this is what's going to happen this week, right? Let's delete this. Fair value gap's gone. So price can either retrace back down here, go back up, might see a little retracement, and then push up to the upside, right? Push back up to the upside. That's what can happen. Or we can see price retrace back down, retrace back up, push up, right? Retrace back down to this level, retrace back up to this level, and then push down, going into this fair value gap here, push back up, right? And then we might see a little push back down on top, retesting, and then price might just soar back up. So we have two. This is a little messed up, but you guys get what I'm saying. So we have two kind of indicators. We're going to move this around a little bit. I'll do it like that. So we have two kind of indicators of what's going to go on. And if price really wants to go for buyers or sellers next week, which to me, I believe price is going to come down and try and retrace this area here. But then again, we do have to just wait and see what price action wants to do. Okay? So Monday, I'm going to wait until probably afternoonish time around lunch to see what price really wants to do. If price wants to retrace here. And if it retraces and breaks through, then I'm going to look for a retest here. Or if it does, if this retest does not hold and it goes up to this midpoint, correct? And this midpoint doesn't hold, then I know for sure that price wants to retrace all the way back down to this order block here. This bullish order block and this opening gap, right? For lunch. So, which is a fair value gap. So, we're going to see what happens on Monday. And if this midpoint holds up and retraces back down, then we know price is going to come back down here. And if I'm unsure about that sell, then guess what's going to happen? Once price gets to this midpoint, guess what? We're going to put some calls and go into the upside. That's all it is. If you miss your swing trade, bow. It's okay. Just wait it out, be patient, grab the buys at a cheaper price. That's it. But thank you for watching. If you guys want to see more videos on this, on like features, indices, or Forex, foreign exchange market, just let me know. Type in the comments, and thank you for watching. Easy way to make some money. All right, peace. I'm out.